For 5,000 years, gold has pretty much defined wealth. But let's be clear, we're not here to talk about gold as some historical relic. We're looking at its powerful strategic role for you, the modern investor, right now. So, think about your portfolio. It's probably full of digital assets, maybe some complex derivatives, right? In a world run by algorithms and paper promises, it's worth asking, where do you find a genuine anchor for your wealth? What provides that true stability? All right, here's how we're going to break this down. First, we'll get into what gives gold its intrinsic value. Then, we'll look at the three big strategic roles it can play in a portfolio. We'll also cover the practical side, how you actually own it, and finally, we'll give the final verdict on its role as a true anchor for your wealth. Okay, so let's start with the fundamentals. Why gold? I mean, really, why this one particular yellow metal? How has it managed to outlast every single empire and every currency ever created? Well, the answer isn't some kind of mystique. It's just straight-up chemistry and physics. See, most other elements just don't cut it as money. Iron, it rusts away. Silver's pretty good, but it eventually tarnishes. But gold? Gold is chemically ignoble. Seriously, you could pull a gold coin from a shipwreck that's been underwater for 2,000 years, and it'll shine just like it was minted yesterday. And here's the kicker. Unlike our modern currencies, you just can't print more of it. It's finite, and that's absolutely crucial. And you really have to understand this piece of history to get where we are today. Before 1971, the world largely ran on a gold standard. Your paper money was basically just a claim check for a real physical amount of gold in a vault. This kind of forced fiscal discipline on governments. But then, in 1971, that link was completely severed. We entered the fiat era, the system we have now, where the value of currency is based entirely on trust in the government that issues it. And as we've all seen, that trust can be, well, pretty fragile. So all that history brings us right to gold's modern-day job inside a portfolio. It's not just a lump of metal, it's more like a Swiss Army knife for preserving your wealth. We're going to dig into three specific roles here: how it acts as a hedge against inflation, how it shields you from market volatility, and why it serves as the ultimate safe haven asset when everything else hits the fan. This quote just perfectly illustrates Dot's first role, an inflation hedge. Think about it. Back in the 1920s, an ounce of gold could buy you a really nice, high-end suit. Today, that very same ounce of gold still buys you a really nice, high-end suit. The key isn't that gold got more expensive. It's that the currency, the dollar, lost its value. Gold's purchasing power holds steady while paper money just erodes away. That is the definition of a true store of value. Okay, role number two, it's a volatility shield. The crucial point here is that gold is a non-correlated asset. That means it often zigs when the stock market zags. So when equities are down, when geopolitical tensions are on the rise, where do investors instinctively run? They run to gold. So you got to stop thinking of it as an investment for growth and start seeing it as a powerful insurance policy for the rest of your portfolio. And that insurance idea leads directly to its third and maybe most important role: the ultimate safe haven. This all boils down to one vital concept: counterparty risk. Think about it. Every single paper asset you own, a stock, a bond, even cash in the bank, depends on someone else's promise to pay you. But physical gold, it requires no trust in any other party. There's no CEO, no government, no bank. If you hold it, you own it. Period. It's the only financial asset that is not simultaneously someone else's liability. Let that sink in for a second. So we've covered the why, but understanding that is just half the battle. Now let's get into the how. For the strategic investor, figuring out the method of ownership is just as important as the decision to own it in the first place. You've basically got two primary paths. On one side, there's physical gold. We're talking coins and bars. This gives you absolute control and zero counterparty risk, which fulfills that ultimate safe haven purpose. The trade-offs are storage and how quickly you can liquidate. Then you have paper gold, like ETFs. They offer incredible convenience and immediate liquidity. But, and this is a big but, you reintroduce counterparty risk and management fees. The choice really hinges on your goal. Are you seeking pure insurance or a more tactical trading instrument? So, what's the final verdict? In a modern portfolio, gold's purpose has to be redefined. It's not about short-term speculation. It's not about chasing a hot trend. It's about long-term preservation and stability. And ultimately, this is the most crucial takeaway. In a financial world that's getting more complex and more uncertain by the day, gold remains the anchor. It's not the asset you buy to chase exponential returns. It's the foundation you hold to ensure that the wealth you've already built endures through any storm. It's not about getting rich. It is quite simply about staying wealthy.